Everyone here on the mountain is talking about US exceptionalism, US growth, US capital investment.
This divergence, Karen, is really an important feature of the world economy that we're seeing right now. And our forecasts did not take into account all the new announcements and policies that have come through in the last 24 hours. So we're going to have to adapt to that. But our take is that we see the US economy as being a strong economy. Consumption is holding up really well. Labor markets are strong. And also now there is the anticipation of tax cuts that will be made more permanent, deregulation. So there's a lot of positive market sentiment over there. Now, in addition to that, of course, there are announcements on the trade policy front. But what we could see that many of these shocks could ultimately end up as being somewhat of an upside to the US because of the positive sentiment, market sentiment that there is, while for most of the rest of the world, it poses a downside risk.
There were so many announcements in those executive orders, and we're still dealing with a lot of rhetoric that we don't know how much of it's going to come to bear, whether it's just a negotiating position. But what did you hear in terms of the announcements this week in particular? Was it tax policy? Was it the threat of tariffs? A big $500 billion AI investment? What really moves the needle on that US growth story in coming years?
I think much of what we heard was expected. It's been a part of the narrative coming into this particular inauguration. We are seeing big movements, big action in immigration, big action in energy, a lot of announcements on tariffs. So this is as we were expecting it. Now, we will wait and see where the dust settles, what will be the exact numbers in terms of tariffs and against whom. We also have to wait and see how countries respond to this, because that's the next part of this, is how countries react to these kinds of policies. But again, I think a point we've been making is for many other countries in the world, there's a lot that they can do by investing in domestic reforms to raise productivity growth at home, which has been quite weak.
To your point around tariffs, it's Kristalina and it's you who've been telling me that, look, tariffs are met with retaliatory tariffs, so nobody wins. Effectively, the global economy shrinks. But this time round, we know that Trump is very transactional and he seems to have the power equation. Could nations simply roll over and allow the US to get on with those tariffs, which would be beneficial for the United States?
We will have to wait and see how countries respond to this. If you just looked at the data over the last several years, even going back to the 2018-19 tariffs, there was retaliation. So we will see if this time is different. But, I think it's too early to tell. Every country is going to be at the negotiating table, trying to get the best deal that they can for their countries, and we'll see where that lands. But this is very far from being in the very typical rules-based international trade environment.
Are you worried that central banks around the world are now reliant on Trump policies despite being so independent for so long? I mean, examples, the Japanese signaling they want to hike rates but now waiting it out for any Trump communication and whether that derails them this week. Other central banks looking at the inflation story if it comes back in the States and whether policy divergence hampers them. So are you worried about that scenario where Trump is now effectively helping set policy for other central banks?
Oh, this is business as usual in terms of what happens in the U.S. matters for the rest of the world. So even if I go back a couple of months or go back years, Japan has been watching very closely what happens in the U.S. And we've seen lots of big movements in terms of long-term interest rates in the U.S. that are spilling over to the rest of the world. So I don't think there's anything specific to this particular administration. It's in general the case that you see spillovers. Now, what has changed is, of course, because of the strength of the U.S. economy, the expectation is that interest rates will stay higher for longer. That has meant higher interest rates at the long end of the yield curve for many, many countries. And also it's meant a stronger dollar. And that obviously has implications, and countries need to build resilience to it.